Where should you put your money right now? In gold or in silver? In 2026, both metals are rising, both are making headlines, and many people are confused. Some say gold is the safest thing you can own. Others say silver could go much higher. So which one is true? If you had only $1,000 today, where should you put it? Stay with me because the answer is not simple, and most people get this wrong. Whenever the world becomes uncertain, people start talking about gold again. War, inflation, debt, economic problems. Every time something feels unstable, gold comes back. This happens because gold is not just a metal. Gold represents trust. For thousands of years, people used gold as money, and even today, countries still keep gold in their reserves. When people stop trusting the economy, they start trusting gold. That is why gold usually goes up when fear goes up. But something interesting has been happening recently. Even though gold feels safer, silver has sometimes moved faster. In 2025 and 2026, silver surprised many investors. Not all the time, but when silver moves, it can move very hard. This happens because silver is not only used for saving money. Silver is also used in industry, in electronics, in solar panels, in technology, and even in military equipment. When industry needs more silver, the price can jump quickly. That is why some people say gold protects you, but silver can grow faster. Now the real question becomes simple. Do you want safety or do you want opportunity? Because most of the time you cannot have both at the same time. Gold usually moves slower, but it feels more stable. Silver can move faster, but it can also fall faster. And this difference is very important because most people don't lose money because of bad assets. They lose money because of bad decisions. If we talk only about safety, gold usually wins. Central banks buy gold. Governments buy gold. Large investors buy gold when they are worried. Gold has been used as money for thousands of years, and that gives people confidence. Silver is valuable too, but silver is more emotional. When silver goes up, people get excited. When silver goes down, people panic. That means silver has more opportunity, but also more risk. Now let's make this practical. Not theory, not history, but real life. What if you only have $1,000? Most people don't have millions to invest. Most people have a few hundred or a few thousand. Should you put everything in gold? Should you put everything in silver? Or should you divide? Many experienced investors choose balance. For example, some people buy more gold for safety and some silver for growth. Something like 60% gold and 40% silver. Gold for stability, silver for movement. Not perfect, but safer than guessing. Rich investors often think differently from normal people. They don't try to predict the future perfectly. They prepare for different possibilities. If gold rises, they are protected. If silver rises, they benefit. If both rise, even better. If one falls, they don't lose everything. This way of thinking is very important, especially when the world feels unstable. And right now, many people feel that the world is unstable. When we look at history, we see something interesting. In some crises, gold moved first, and silver followed later. In other times, silver moved faster than gold. In the 1970s, during high inflation, gold went up a lot. During the 2008 financial crisis, gold became popular again. In recent years, both gold and silver moved when people were worried about inflation and debt. The lesson from history is simple. Nobody can predict perfectly what will happen next. That is why smart investors don't put everything in one place. Another important question many people never ask is this: should you buy real gold and silver, or should you buy paper gold and silver? Real gold means coins or bars that you can hold in your hand. Paper gold means things like funds or accounts that follow the price. Real metal feels safer to some people because you actually own it. Paper metal is easier to buy and sell, but some people don't trust it during big crises. This is why many experienced investors prefer to own at least some real metal, even if it is a small amount. We should also talk about war and global tension because this affects gold and silver a lot. When there is war, fear increases. When fear increases, many people sell stocks and move money into safer things. Gold is usually the first place money goes. Silver often follows later because silver is also used in industry. During uncertain times, both metals can go up, but they don't always move the same way. That is why understanding the difference matters. Another mistake beginners make is buying when everyone is excited. When prices go up, people feel they are late and they rush to buy. When prices go down, people panic and sell. This is the opposite of what experienced investors do. Experienced investors try to stay calm. They buy slowly, not all at once. They don't put all their money in one thing, and they always think about the long term, not only about today. Now let's talk about the future. Nobody knows exactly what will happen, but we can see some things clearly. Debt is high in many countries. Inflation has been rising in recent years. Conflicts around the world are increasing. When these things happen, people usually look for protection. That is why many investors still believe gold and silver will stay important in the next years. Not because they are perfect, but because they are real assets that don't depend on promises. So what would I do if I had only $1,000 today? I would not try to be too smart. I would try to be safe. Maybe I would buy some gold for protection and some silver for opportunity. Enough gold to feel stable and enough silver to have a chance if the price moves. Not all in one, not all in the other. Balance is not exciting, but balance protects you from big mistakes. In the end, the real question is not gold or silver. The real question is whether you have a plan. When the world becomes uncertain, people without a plan panic first. People with a plan stay calm. Gold and silver are not magic. They are tools. And like every tool, they help only if you use them wisely. So before you decide where to put your money, ask yourself something simple. If something goes wrong tomorrow, will your money survive? When regional war breaks out, the economy reacts immediately. First, markets panic. Stocks usually drop. Investors move their money to safe haven assets. Gold, it usually goes up. Silver often follows gold, but with more volatility. The US dollar, if the conflict is outside the United States, the dollar often strengthens because investors see it as stable. Oil prices, they can spike fast. So what should you do? 1. Don't sell in panic. Market fear creates bad decisions. 2. If you don't own gold, consider allocating 10 to 15% of your portfolio as protection. Not 50%, not everything, just a portion. 3. Keep extra cash liquidity. Uncertainty creates opportunity. 4. Avoid new high-risk investments during volatility. 5. If energy prices are rising, plan ahead. Fill your tank. Adjust your monthly budget early. War creates volatility. Follow the money advisor for calm financial clarity.